Hello, this video is to show you the landed cost and average costing in Odoo19. Before we start, there are a few settings. So localization, these sections in the settings and the account. Okay, so this is a database. Let's start with accounting. On the settings, start with United States localization as an example. These workflow will be available and should be the same process for the other localization. But if your localization is not US, but Canada or any other country, please do a certain test. What might be different is if you scroll down, it's this inventory valuation part. In US and Canada, we're using Perpetual. If you're not using Perpetual, you might see a different, very different process. These doesn't really matter that much. It's just how often Odoo automatically generate lump sum journal entry for you. And in this case, I'm choosing average costing. Valuation, there is default accounts and valuation journal. And don't forget to save. In the chart of accounts, I will create another new account called inventory variation accounts. 11999 is just a code that I gave. You can rename the code you want, and then the current asset allow reconciliation. Then you will have another default account called inventory valuation account. You would just change the raw material to this current asset type variation account. Okay, so now these are all the settings. Let's collide that part. For the workflow, let's start with product. We said there is 5 quantity for cost $100 each. So product A1 is here, $100. And then we start with quantity 5. Our category is average. So it's average in perpetual and cost of goods. So valuation variation account, good. It's a product type of good and track inventory. And let's say we have 5 quantity on hand. So by doing so, you will look at the inventory move analysis. Here, it does tell you what's the reference to have these 5, and then the cursor, you can add value, remaining quantity, and remaining value here. Okay, okay, cool. And then let's take a look at the accounting. On the balance sheet, it doesn't show, but if we do go to review and valuation, and let's generate the entry, Odoo will give us this entry. At this point, it's not variation, but some type of a go live inventory, which is like a clearing, go live clearing. So somehow we need to do a proper go live account with the go live process with a proper clearing account with open balance, but right now we don't have it. So let's just assume that our balance sheet have these valuation account, and in this case, no variation, and it just use a clearing account. Okay, so this is when we start using, before we start any process, this is the product we have exist. We purchase, receive, quantity 5, now the cost is $150. So let's make a purchase order. From a vendor, and we're buying these A1 product, and we're buying quantity 5 at $150 each. Confirm and receive. Until you validate is receive, that's when the pricing has been updated. Even before you have a vendor bill, the pricing already changed. If you check the product right now, the cost already adapt to 125. Why? Because here's the calculation. The 500 is what we already have with the value plus 750 value divided by the total quantity. 5 plus 5, now we have 10 quantity on hand. Each one is 125. Now let's quickly create a vendor bill. So in version 19, we're more respect the vendor bill. Okay, and there's a bill date, valuation account confirm. By doing so, you can see that our accounting balance sheet already impact 1250, which is the same as our inventory app, move analysis, list view on 1250 if you add these total value together. Okay. Next, let's grab lender cost. We can take a look at, sorry, let me do a quick screenshot. Inventory reports. Okay, perfect. Now, what our next part is generate the lender cost, which is a bill for $50. We do need to remember our purchase order receipt. We had a receipt. We need to remember these sequence. When we create a lender cost, we can directly just go from accounting. Lender cost is finally a bill that we're paying someone. So you can say vendor for lender cost, right? And then you're paying for a service product, tariff. And you can say this is a price of $50 here. And then the bill date, and then save and confirm. The moment you confirm, it's already adding into your valuation because of our perpetual. It's not the expense until you sell it. But right now we have not sell it. And you can just create a proper lender cost that using this valuation account, validate. Oh, sorry, we need to define a transfer. So then we're good. Now you see the journal entry, which is, this doesn't really make sense on the journal entry because the vendor bill itself directly impact on the valuation. So right now, instead of $1250, you add another $50 on your asset until you start selling it. Because you apply the lender cost with a certain transfer, your inventory move analysis get impacted as well. So 750 changed to 800, even though now it's individually it's 650, not 625, because it impact on all. When it comes to averaging, it just averaging out whatever you have currently on hand. Okay, we still have not start selling it. We keep, and also until now, your lender cost, your product cost change as well. The total value change, the product itself with the cost change from 125 to 130. Coming back, we are purchasing again with a different value, quantity 5 as well. So duplicate the purchase. Now it's $200. Confirm, receive, validate. And let's finish the process. Let's also create a bill. And okay, confirm. Now we're in here. The product cost right now is $153. Let's take a quick look on inventory report. Let's take a look at the product first. Product for A1. You'll see now it's 153. Let's look at inventory report. Now, total value being adjusted, all these value will be summed up with this. And then you will look at the accounting balance sheet. The total is 2,300. Okay. Now, we are applying the lender cost again. This lender cost right now is $100. So again, with our lender cost, sorry, let's go back to the purchase and remember our transfer. Our transfer is, this receipt is number 2. So we create a vendor bill, which is now service lender cost. Now it's $100. Okay. confirm, and then create a lender cost to apply to the certain transfer. Only when you apply to the certain transfer, your product and the inventory will be adjusted again. Now it's 160. With the inventory, the move analysis, it changed to 800, 800, 800. Okay. And 800 times 3, 2400. Your accounting balance sheet increase another 100 as well. Now let's be ready and start selling. We're going to sell the product for quantity 10. If you're selling quantity 10, let's take a look at inventory report real quick. If you're selling quantity 10, with our removal strategy, it's by default removing from the first in, first out. But because you're averaging out the cost, so it doesn't really matter which 5 batch you take. But Odoo still remember the sequence. So the 10, they will still take the first 5 and then take another 5. So they will take 10 instead of taking this 10 or taking this 10, right? It will still follow the sequence. All right. So let's make a sale. And we can sell, because our cost right now is about 160. So then you can adjust your unit price. Let's say you're selling for $250 each. So total, you're selling this much. Confirm, and you will deliver. After delivery, you will create an invoice and then confirm. By confirming the invoice, you will see that Odoo would track the income accounts 2,500, 2,500, but the cost of goods sold will be removing the 1,600. So what does that mean in accounting? It reduced from 2,400, reducing 1,600 for 1,800 left, and the other 1,800 is in your profit and loss statement, where your revenue is 2,500, your cost of goods sold is 1,600. So this is your profit. Okay. What about inventory? Because you're removing, even though you're charging 2,500, you are really removing a 1,600 value. So in here, it shows red to reflect it's going out. And then now you will see the remaining value of the first 2 batch, 800 each, is all gone because it's delivered. The third batch of 5, it's what we still have remaining, which is 800. And if you sum up all these 800, it's matching with our accounting report. 800 here. Okay. If you try to create a valuation, there's nothing to do any variation because every other bill, every other purchase has a proper vendor bill. So we're all good. So this is basically how average costing, lender cost impact on product costing and the valuation at each step. I hope that makes sense. Thank you.